This is the Retirement Key Podcast with Justin Dobak, financial advisor of Abish Financial Services.
Welcome back to the Retirement Key. I'm Casey Biddy, and I'm here with Justin Dobak, financial advisor and a chartered retirement planning counselor at Abish Financial Services. Justin, I'm always excited to sit down with you. How are you doing today?
Absolutely. We're fired up. I was just telling you, it's a little hot here. We're in the dog days of summer now, but it's a good thing to have a pool.
We sure are, but we're surviving and we're also thriving. And I'm excited to chat with you today because if you joined us last episode, you know we kicked off a two-part series on Roth conversions with our buddy Joshua Barbin. We talked about what they are, how they work, and why so many people are talking about them right now. So today we're going to dive into part two, and we're shifting into the strategy side of Roth conversions. So not just what they are, but how to actually use them to your advantage. We're talking timing, tax brackets, legacy planning, even the ripple effect on Medicare and Social Security. So if you've ever asked yourself, should I convert now or should I wait? This episode is for you. Stay tuned. So, Justin, I want to pick up with you right where I left off with JB. We have talked about what a Roth conversion is and why someone might want to do one, but timing is everything, right? So let's start there. When's the best time to consider a Roth conversion? Is it before retirement, during those early retirement years, or even maybe after you're already fully retired? What are your thoughts here?
Absolutely. And the answer is, does not fall into any of those three things you just said. The answer is when you are at the lowest income earning years of your life. If that is while you're working and have W-2 salary, if that's in retirement when you lose that salary, but now we talk about pensions, Social Security, which is another conversation with the big beautiful bill. But there is a more complicated answer than just before, during, or post-retirement. So really, just want to hammer it down. It's in those low income earning years. That's when it's going to be most beneficial.
Well, so that leads me to my next question, because I know you're big on using Roth conversions as a tool for long-term tax bracket management. So how do Roth conversions help people manage their tax brackets over time? What does that actually look like in practice?
Absolutely. And I think it all boils down to this, and JB definitely covered this topic, is a lot of folks, yes, when you do retire, you are going to be making bunny ears less than you were during your working careers. But for the folks, especially up here in the DC area, right, government employees, pension income, large Social Security benefits, et cetera, you find that in retirement, you're actually making more taxable income than you were in your retiring years. So the conversation arises, how do I get ahead of these big tax bills in either the future or in the present right now? And it all boils down to when that income falls to the lowest amount. Now, one of the big questions I always get is, well, Justin, why can't I just convert my entire $1 million 401k today? We're in a historically low tax rate environment, and yes, that's true. But my answer is, okay, yes, you can convert every single dollar in a tax-deferred account this year. However, if you convert that $1 million 401k, guess what? That's $1 million of taxable income in one single year. Now you're in the highest tax bracket. That Roth conversion doesn't make any sense. So that's why we like building out plans, strategies, timelines around these Roth conversions, because a lot of times the easy answer is no, we won't be able to convert every single dollar in your 401k because it tactically just doesn't make sense. But by building out that structure of each year, say you are making $150,000 of income, taxable income in retirement, you're married, you're within the 22% tax bracket, but you have a little bit of wiggle room up to that top of the 22% tax bracket. That's where we see opportunities to pay the taxes at a discount, right? Because those are your lowest income earning years, fill you to the top of usually your existing tax bracket, get those dollars into a Roth IRA, can then grow tax-free, distributed tax-free, and no longer subject to RMDs. That's generally the focus when looking for that opportunity with Roth conversions.
For sure. All right. Well, so far we've been mostly talking about the income tax side of things, but I know Roth conversions can also affect other parts of someone's retirement picture. So Justin, how do Roth conversions impact things like Medicare premiums, Social Security taxation, or other income-based thresholds that retirees need to be on the lookout for?
The sweet, simple answer is it is taxable income. So if you convert that $50,000 in this year, well, that's $50,000 of taxable income. Yes, we paid it at a discount. Now it's growing tax-free. Now it's distributed tax-free, all those wonderful things. But if you're concerned about your IRMA filing, your IRMA brackets with Medicare premiums, if you're concerned about your general tax bracket, if you're concerned about now your Social Security benefit, right, $150,000 or less to marry, filing jointly, your Social Security benefit is now income tax-free, right? If pushing yourself beyond that is a priority or concern to you, all right, maybe Roth conversions to a lesser degree make sense. But the bottom line here is that it is taxable income, and it does affect all of those brackets, all of those filings, IRMA, Social Security, Medicare, all of the above. So be very, very careful. Like I said, it's not let me just try and stuff things into a Roth IRA as quick as I can. It needs to be done tactically, because there are a lot of moving pieces. There are a lot of consequences if we convert even just a few dollars too much, right? That could be a make or break of a few $1,000s in your IRMA filings, your IRMA brackets. Exactly, yeah.
And incorporating the help of a professional to help navigate you through this, because it's not just about taxes today. It's about that domino effect that could happen to everything else in your financial world. So you want a professional walking you through this so you don't make those mistakes. Now, Justin, let's talk legacy for a moment, because for some folks, the real motivation behind a Roth conversion is actually about their next generation. So should people who plan to leave assets to heirs be thinking about Roth conversions differently than someone who's just planning maybe for their own lifetime?
Yeah, and this one's a little bit more complicated, and I'll preface it with a table of contents.
Okay.
That there is this thing called legislative risk, and everything that we talk about right now today is for our current laws and regulations regarding how different accounts are taxed at the end of your life. Right, traditional IRAs, 401ks, everything pre-tax currently is now subject to that 10-year rule. So as long as it's not a spouse, but if it's inherited by kids, family, etc., it's subject to that 10-year rule where the account must be depleted in 10 years' time. Right? That could be a big tax problem. It could also be a benefit, right? You just got handed a big chunk of money. Of course, great. But if you're a doctor, a lawyer, and you're making a lot of money in your 40s and 50s, and you inherit an inherited 10-year IRA, and you got to take those dollars out, guess what? You're paying it at those high taxes, okay? Now, the Roth IRA, anything after tax, right now in today's laws, it is inherited to those families, those kids, et cetera, beneficiaries, et cetera. But it still does apply to that 10-year rule. However, it's income tax-free. Okay. So the dollars still have to come out, but they get to utilize that tax shelter for 10 years. And ideally, we say just stretch it out as long as you can, yank it out at the end. It's all income tax-free. Okay. But that is as of today. There is always the risk, and especially when we're talking about life expectancy, 15, 25 years, these rules can change. So I just want everyone listening to this podcast to be aware that, yeah, right now, today, that is the case. We were talking about earlier this election year, Kamala, and talking about how unrealized gains may be taxed, how no more potential step up in cost basis for those brokerage accounts. This all adds to the fire for the complication of estate and tax planning. So, right now, as is, if you are concerned about getting dollars to your kids, your family, your beneficiaries in the most tax efficient manner possible, yes, Roth IRAs and Roth conversions, getting dollars into that Roth IRA is going to be immensely beneficial, but there will always be risks. Okay.
Now, before I let you go, Justin, I touched on this a little bit earlier, emphasizing the importance of incorporating the help of a professional to help walk you through this process, because this is one of those strategies where I think if you're trying to DIY it, it can really get you into trouble if you're not careful. So talk to us a little bit more about what role a financial advisor or a tax professional plays in helping someone build a Roth conversion plan that's actually going to work for them for their specific situation.
Number one, and most importantly, you need to have an income plan in place before we even start talking about Roth conversions.
Okay.
We need to understand each and every single year, say over the next 10 to 15 years, what are we anticipating your income going to be? And it needs to be accurate, right? If you say, hey, Justin, when I retire, my income's going to fall from $150,000 while I was working to $100,000. I don't think I'm going to spend that much. And I go, okay, yeah, I hear you. And we settle on that plan. We get to retirement. And you say, oops, Justin, I need to take a $50,000 distribution from my traditional IRA. And I go, ooh, okay, well, we did a Roth conversion. Now we have taxable income of $100,000 or $200,000. Oops. Now we're flirting with those IRMA brackets. We're flirting with the Social Security benefit now being taxable. We're flirting with, just larger tax brackets in general. So having that income plan is step number one. And you need, I know a lot of people are good with spreadsheets and like putting their stuff together. A true financial professional is going to look at all those stones that maybe you forgot to turn over. And I cannot emphasize enough. Come in and sit down, have a complimentary meeting with us. Let's put together one of those income plans for you to see if Roth conversions do make sense for you. If there is an opportunity, we will send you home with that roadmap, with that layout of what years do we want to start converting? If we can convert, what are the limits? What are the minimums? If that's something that interests you, schedule a meeting with us. We're happy to walk through it. We talk about this on quite literally a daily basis. So this is something we got a lot of passion about.
Absolutely. Justin, thank you so much for sharing your insight with us today. Roth conversions can be incredibly powerful, but they really need to be done intentionally with your full financial picture in mind. And exactly like you said, that is where the right advisor comes in to help walk you through this. So if you're listening, you've been wondering whether a Roth conversion could help you lower your taxes or create more flexibility in your retirement or even pass more money on to your heirs when you leave, now's a great time to get that second opinion. You can head to theretirementkey.com. From there, you can schedule some time with the team at Abish Financial Services, and they can help you figure out if a Roth conversion is the right move for your specific plan. That's going to wrap up our two-part series. If you missed part one, make sure you go back, give it a listen, and stick with us each week for more strategies to help you retire smart, confident, and on your own terms. For Abish Financial Services, I'm Casey Biddy, and we will see you next time.
Thanks for listening to the Retirement Key Podcast. To learn more about Abish Financial Services, visit theretirementkey.com. Abish Financial Wealth Management is a registered investment advisor with the SEC. Registration as an investment advisor does not imply a certain level of skill or training, and the content of this communication has not been approved or verified by the United States Securities and Exchange Commission or by any state securities authority. The information contained in this material is intended to provide general information about Abish Financial Wealth Management and its services. It is not intended to offer investment advice. Investment advice will only be given after a client engages our services by executing the appropriate investment services agreement. Information regarding investment products and services are provided solely to read about our investment philosophy and our strategies.